that's the problem. When they go in and they first start drilling in any shale play, and it follows the same pattern no matter where you are in the world, you see a frenzy of drilling in the first year or so, and you see a lot of gas or oil come online, and it looks like, just on the surface of things, it looks like the play's fantastic. And of course that's the spin that the industry puts on it. But what they can't do, what they have not been able to do, is maintain that for any meaningful period of time. My work shows that you do get some economic benefit from shale, there's no doubt about it, for about the first 3 to 4 years, and then it plummets like the proverbial rock off a cliff. It just falls off. The jobs go away. They just kind of leave town after that because they cannot keep that without a continuous proliferation of wells. They can't keep that production plateau stable. They just can't. They haven't been able to do it. The wells deplete too quickly. The report that I wrote through Energy Policy Forum that came out in February addressed what I see as a major driving factor behind shales, and that was the Wall Street investment banking role. You can't do an exercise like this without an enormous influx of cash, and that has to come from Wall Street, and that's exactly what happened. Now what's interesting about this, and my premise is in that report, and I stand by it, is that I think shales should have come unraveled sometime back around 2009, but they didn't. And so I had to go in and ask myself the question, why? Why is this still going? Because you could see, you could begin to see back in 2009, Art Berman did quite a lot of work on this, that production was beginning to slide. And so what kept it going? Well, it was interesting. When the price of gas, natural gas, started to, you have to go back into the mortgage-backed securities crisis, actually. Mortgage-backed securities were the #1 profit center at most of the major Wall Street investment banks. And suddenly that imploded and it all came to a screeching halt. It came to an end. And so the banks were then scrambling because they had lost a huge revenue maker for them. And what was interesting was those banks are divided. You have your investment banking side, and then you have your analyst side. And what was interesting to my mind was that even though some geologists and petroleum engineers were coming out and stating we're seeing problems with the actual production numbers in shale, and we're seeing production begin to slide, the analysts were coming out and saying exactly the opposite at these investment banks. They were saying shale is the new panacea, we're going to be energy independent, this is the greatest thing ever, and you should be putting your money into this. And that was very convenient because investors were then putting monies into shale gas companies, and they were keeping these stock prices rising, even though production based on actual wells was beginning to drop off. And but what happens in the meantime? Shales then become the #1 profit center at the Wall Street. They've just now replaced mortgage-backed securities. Wow. The best way, I think, to explain this is that the Wall Street investment banks, through their analysts and their army of brokers out in the field, became the chief cheerleaders for shale. They were the ones that were hyping it and promoting it and so forth, and people thought, this is great, this is where I need to place my money. In the meantime, gas prices are dropping rather dramatically. They fell about 50%, and then they continued to fall. Now, that opened up an interesting scenario, because then what did the investment banks do? They did exactly what, and because that shows that a company is still growing. If you can't grow production as an oil and gas company, then that means you've either plateaued or you're in decline. So you want to be able to show that you're growing production. So that's one of the primary metrics that they use. Now, those analysts expect you to meet that, and if you don't meet that, then they'll either downgrade your stock, which means that not as much money is flowing in, investors aren't investing in, your stock, and that constrains your access to borrowing monies in the capital markets. So these companies are going to jump through hoops to meet those production targets. So if you're an investment banker, what you can do, it's really quite simple. You can just look at it and state, all right, we know what the production was for, let's say, 2010. We know what the targets are for 2011. We have a pretty good indication that these companies are going to do everything they possibly can to meet that production target. Therefore, we can extrapolate out 12 to 24 months in advance where we think production will be. And then you can compare that number with how much you use, what's the demand, and it's very simple to figure out that the supply was going to exceed demand quite significantly. Exactly. I mean, it's going to go one direction and one direction only, down. So then what do you do as an investment banker? You look at it and you say, okay, the price is probably going to fall. Pretty good indication that it's going to fall. And then you turn around to the larger companies and you go to them behind the scenes and you state, you can now probably pick up shale gas assets for cents on the dollar and we can help you. Because these companies are going to be struggling, these larger independents. And that's exactly what they did. They went then to the majors and stated, we can do this. They had expanded the definition of reserves, and so it made sense for the larger majors to go in and buy shale reserves, because the majors had not been able to grow their reserves in a material way for over a decade, and suddenly now they could show a growth in reserves, which that's helped your stock price as well. So this all made sense, and in the meantime, even though prices were falling, production was falling, etc., the investment banks were making a lot of money off of shales. What's interesting to me is that that is now dried up. Shale deals have, the mergers and acquisition deals in shales, because I think people have been burned, companies have been burned, they've dried up.